All right, we'll call the meeting to order of the Special Subcommittee on Tax Conformity. Can we call the roll? Who does that here?
Senator Barker.
Here.
Senator Howell. Senator Newman. Senator Normant.
Here.
Senator Locke. Not here. Senator Peterson. You have a quorum.
All right, and Senator Peterson may not be here, given that he's chairing a subcommittee of the Judiciary Committee on the floor of the Senate right now. So what we need to do is to just sort of review things and have Secretary Lane make a presentation to us quickly on things, and then we'll deal with the conformity issues. And there are two bills, which are Senator Howell's and Senator Peterson's bills to do that. I have had several conversations with some of the different business groups over the latter part of last week, leading up to today, and can sort of provide some answers and some perspectives that they shared with me on that. So with that, Secretary Lane, are you ready to go?
Yes, sir, Mr. Chairman, I am. Since this will be a second or third time I've done this, I'm going to go through the slides pretty quickly. But since the public is here and Senator Howell is presenting Senate Bill 1146, I thought I'd just go through them real quickly. Again, we're here to talk about the Conformity Act, which we do every year. This bill does contain an emergency clause, the way it is drafted now. As you know, we do conformity mainly for convenience, and the Virginia has a long history of deconforming to some items as we have made it not in the best interest of some of our constituents. So with that, we'll go to the next slide.
All right.
This slide just lists out the two acts that were included in the conformity bill: the CARES Act, which was passed by Congress early in the year, and then the Consolidated Appropriations Act, which was passed on December 27th. I won't go through all the details, but Senate Bill 1146, as drafted, does include the revenue impact where it says total CARES Act provisions of 34.2 million reduction in 2021 and 7.5 reduction in 2022. It does not include those provisions of the Consolidated Appropriations Act, which you see on the bottom of the page here, that would include another $9 million reduction in revenues in 2021 and another $69.7 million reduction in year 2022. Generalizing this, most of the individual provisions related to the Consolidated Appropriations Act and the CARES Act, we have recommended, the administration has recommended that we conform to those provisions. But again, as the bill is drafted, would have to have a budget amendment of what's at the bottom of the page, showing again the Consolidated Appropriation Act provisions. Next page, please. Senator Barker, I know you've heard from a lot of people, so if these are the parts of those two acts that we are not recommending to conforming to, recommending that we deconform to most of the business provisions in both of these two acts. If you look at the CARES Act above, it would be about a $665 million reduction in 2022 in our revenues, primarily related to loss carrybacks in the CARES Act that we're recommending that we not conform to. And then probably the one that's got the most attention here is down below with the Consolidated Appropriations Act. The first one, the medical expense floor, is an individual provision. We recommended not to conform simply because the General Assembly did not conform to this part this item last year. But the one that's got a lot of, I know, people that have called me about, sir, and I'm sure many members of the committee, is the deductibility of expenses funded by the PPP loan. And let me put out here, the issue is not whether or not they got a loan. The issue is whether they got the loan forgiven. And I'll get into that a little bit more. But you can see that would generate a loss of revenue in year 2021 is somewhere between 150 and 190 million dollars, and in 2022 of 200 and 325 million dollars. The reason there's a range here is because we have to take into effect the liability of some of these entities or individuals who might get the benefit if this were conformed to. And so that's why there is a range here. I would mention the program is ongoing. We estimate it could be as much as $900 million total revenue impact of the Commonwealth based on the ongoing program. Next page, please. As I mentioned, the Northern Administration has recommended that we do deconform to this, primarily for three reasons. Number one, the state revenue impact is significant, but also in regards tax policy and public policy, we believe the forgiveness of these loans represents an additional tax benefit that many businesses and individuals in the Commonwealth were not afforded the opportunity to take. So if you look at this again, I know a lot of people talk about, well, you got a loan and you can be able to deduct the expenses. The issue is not the loan. The issue is when it becomes a grant. And that is, I think, causing a lot of the differences in terms of how other grants are accounted for and taxed in the Commonwealth. If we go to the next page, please. So if you look at the column on the left, which is what I will call the default tax policy, what this is, it shows that if an individual was to get a PPP loan, quite frankly, any loan, I use the example of $150,000, and the expenses for that loan were $150,000, and there was no cash out of pocket, that typically what happens that the forgiveness of that loan, and that's what that income is, the forgiveness of that loan, it now becomes a grant. That's typically taxed. And then at the expenses related to that are typically allowed as a deduction. So therefore, there is no tax impact and no cash impact to the company. And I would point out here, this is the way Rebuild Virginia grants are being treated, both at the federal and state level. If that grant is given to a small business, it has to report that as taxable income, and then it is allowed to take those deductions that related to that. So that's the default tax policy. It's been the standing rule of the IRS for many years. The next column is what happened with the CARES Act. It's a similar in amount, similar in tax treatment, although they do it a little differently. The loan is received for $150,000. You have $150,000 expenses, no cash impact. You've not incurred any liability for those expenses. In effect, you've been paid for those expenses. But the CARES Act said, well, we're not going to tax the revenue related to the loan forgiveness, but we are not going to allow you to deduct take the tax deductions. And again, it's a zero net tax benefit. Basically, the fact that those deductions had been paid for by a grant. That's the CARES Act, and that was the revenue law or the revenue policy of the IRS related to this as of December 27th. And that's the way our budget was built. Then on December 27th, the Consolidated Appropriations Act came out. And then again, taking you through the example here, $150,000 loan, expenses of $150,000. Again, no out of cash to the recipient, expenses paid for. Don't have to pay tax on the revenue, but the Consolidated Appropriations Act did allow at the federal level a deduction for expenses, therefore giving the taxpayer not only the free loan, I won't call it free, the loan that's not taxed, and an additional tax benefit. The issue with, from our perspective here, besides tax policy, is there is approximately 250,000 individuals and businesses in the Commonwealth that would be eligible for these loans. Only 130,000 of them, 113,000, excuse me, were able to get these loans. As you all know, it was not done based on need. It was pretty much first come, first served as we look at this. So a lot of small businesses were not allowed to be a part of this program. Therefore, all those businesses in the last column who were not allowed, did not get these loans, or got a loan from somebody that, other than the government, that they have to pay back, they're out of pocket $150,000 and appropriately should be able to deduct the expenses. Yet the Consolidated Appropriations Act would have those individuals who didn't receive a loan, had to come out of pocket for the expenses, the same treatment as for those who did get that loan and got the grant approved or forgiven. So that is the differences in the tax policy, and the reason why the Northam administration is recommending a deconformity from this. Again, there were an article recently pointing out that many small businesses who didn't have banking relationships were not available to be able to get these loans. Next page, please. However, at our last meeting, the members, some members of your group wanted us to take a look at if, in fact, there were other ways to help small businesses. And I would say that's where we are now. If we're talking about helping small businesses, we don't think tax policy is the way to do it. We think direct grants are, particularly for those who didn't get these loans forgiven. But nonetheless, we did take a look at a couple of different ways of how we could limit the impact to the Commonwealth and help some of those smaller businesses. There, again, as I said, 113,000 loans in the or grants in the Commonwealth, assuming it for PPP. About 5,000 of those are nonprofit, so they would not be impacted. So about 108,000 businesses would be impacted. If you look at most of that, and I'll get to that chart in a second, we looked at those businesses that had loans that averaged 100,000, 50,000, 25,000, and 10,000. The average loan in the Commonwealth was about $107,000. So we started at that and looked at if we limited that deduction for those expenditures that were paid for to those amounts, what the revenue impact would be. I would also point out we did take a look at whether or not we could break this down by industry. Several of the members had asked if we looked at that. There is a breakdown by NAIC code that would be available, at least the way the PPP loans or grants were given out. That doesn't actually coordinate with our tax department. So in looking at which ones were impacted, we would basically have to take the word of the taxpayer. We'd have no audit, and I'm not saying that they're dishonest. I'm just pointing out we would not have any way to verify that. And of course, as we all know, most restaurants were impacted significantly, but not all. Most contractors were able to work, but not all. So when you start doing it that way, you necessarily are saying some businesses were impacted and some weren't in categories, and maybe that is accurate and maybe that is not. So we thought the best way, if we were going to look at this, would be taking a look at it from limiting the deductions. Next page, please. As I mentioned out here, if you look at the number of loans across these breakdowns, 80% of the loans are for $100,000 or less. So you would get 80% of the participants if you were to limit it to $100,000. And of course, you'd get 66% if you included all eligible people at 50,000, almost 50% at 25,000, and about a quarter at 10,000. The other decision you'd need to make if you want to allow both corporate and non-corporate entities to take advantage of this, and those numbers are laid out for you there. As you can see, a lot more in individuals in the non-corporate than there were in those corporate industry that got these loans. Next page, please. So there were several considerations. Again, the deduction amount, the timing of the qualified loans. Would you allow it to be both in 20 for taxable years 20 and 21? Obviously, the way the law works is once the taxpayer determines that he is or have fulfilled the requirements for making this loan now a grant, that's the year they would take it in. The loan program is continuing, so that's one other consideration. And then the type of taxpayer, should it be limited to individuals or do you want to expand it to corporate entities? Next page, please. So when you look at that, these are the thresholds between the 2 years For the first table I have here is if you only allow the deduction for the tax year 2020. Those entities that were allowed had fulfilled the requirement in 20. You can see both at the 100,000 down to the 10,000, the ranges from allowing both corporate and individuals to only individuals between 21 and 22. And I mentioned last time, I'll mention it again, I would suggest it's probably closer to the lower ranges here. We had to run this data off of 2019 income data, which was the last we had. We would expect that to be lower in 20. So I would expect it to be closer to the lower ranges here as we move forward. Also, there are some entities that will be in a loss situation. So even if they're allowed to deduct the deductions, they would not get a benefit in 20 for those. Next page, please. If you were to then expand that to allowing the taxpayer to make the decision in 20 and 21, another year, you could see it doesn't change much in 21, but obviously would have another probably significant impact in 22. So again, ranging from corporate and individual down from 100,000 to 10,000, and then broken down by the range from 100,000 to 10,000. Next page, please. If in fact the General Assembly would go there and wanted to do this, though, in an effort to make this policy more applicable across entities that were eligible, we mentioned that you should treat the Virginia Rebuild Virginia Grants program the same way. Those are grants that are now taxed at the federal level. Not much I can do about that. We don't have any control over tax, but these are grants up to $100,000. That many of those individuals were not allowed to participate in the PPP program, just didn't get there in time, ran out of money. And therefore, we would suggest that we be consistent in treating those. It's about another $4.5 million, a maximum of $4.5 million revenue impact. Next page, please. And then as we looked across the Commonwealth, we also saw that there were a lot of the local monies and the CARES Act we gave to localities had small business programs in them. They are currently taxed at the federal level. Can't do anything about that. But if you decide that you are going to conform in some way to the PPP, we would suggest you would include those small business grants in that also. You can see that would add anywhere of about 21 to $25 million additional exposure, including Rebuild Virginia, the CARES, and these other grants that are currently taxed at the federal level, unlike the PPP loan forgiveness. So, Mr. Chairman, that to sort of wrap up, it is the Northam administration that we should not conform to the PPP loan forgiveness at any level. But the governor has said he would work with the General Assembly and not oppose something that was targeted to smaller businesses if that's where the General Assembly chose to go. Mr. Chairman, that completes my presentation.
All right. Are there any questions for the Secretary?
Mr. Chairman.
Yes, Senator Newman.
Are we going to hear public comment?
Yes.
Because if we are, I may just wait until then. So.
All right. That sounds fine. All right. Before we get into discussion, maybe what we ought to do is do that public comment then, and now would be a good time to do that. And then we'll have presentation of Senator Howell's bill, and we'll figure out how we handle Senator Peterson's with him not here. So how many people do you have who want to testify?
Mr. Chairman, there
Yes.
are 3 people in the waiting room.
All right.
The first person in the waiting room is Clayton Medford.
All right. Mr. Medford.
Hi, Mr. Chairman, can you hear me?
Yes.
All right, thank you. It's Clayton Medford with the Northern Virginia Chamber of Commerce. Appreciate you taking the time and taking public testimony on this. We believe the General Assembly is in a good position to provide tax relief to struggling small businesses by conforming with the federal tax rules the Secretary described, and would hope that you would support that. Thank you.
All right.
The next person in the waiting room is Nicole Riley.
All right.
Hi, Mr. Chairman, Nicole Riley. Can you hear me?
Yes, we can.
Okay, great. Thank you. Hi, Nicole Riley, Virginia State Director for NFIB, representing about 6,000 small and independent business owners in the Commonwealth. Our members certainly were able to take advantage of the PPP loans. When we asked them about the deductibility piece, 92% of them supported efforts to include the deductibility. For many of them, this was not a loan that they wanted to take out. This was a loan that they took because government shut their doors and then asked them to keep paying their employees and not put them on the unemployment rolls. So, Congress, when they passed this, it was their intent that business owners would be able to take advantage of both tax provisions, understanding that this was a unique situation and businesses were forced to close. There obviously was disagreement later in the year with the IRS, but in every Speaker Pelosi and all of her proposals for the HEROES Act, as well as coming from several of the Republican and Senate Democrat leadership, I have a letter that I can provide, and made it very clear that this was their original intent. And so for many of our small business owners, this will be a surprise to them that they will not be able to take the full deductibility of their expenses. And so we think it's very important that the General Assembly does conform. And I'll give you a real quick example of one of my members. She's here in Richmond. She has an office products business. She employs 28 employees, and she used her entire loan on payroll. She didn't even pay her expenses with it. She just paid payroll. She was able to keep all of her employees whole, including her sales commission people who clearly weren't making sales because she's an office product. So all of her customers have clearly, sent their people home to work. And so she has seen revenue loss of almost 50% over the year, but she is anticipating that she will have potentially could see a $20,000 state tax bill if she's not allowed to deduct. And just this January, she's anticipating a loss of about $17,000. So for her, 2021 is just as scary as 2020. So again, we feel that this is immediate relief for small business owners when they do their taxes this spring, and will help them to weather the rest of 2021. And so we ask that you include deductibility in the tax conformity legislation. Thank you.
All right.
Mr. Chairman, the next speaker is Emily Walker.
All right. Ms. Walker.
Great. Mr. Chair, this is Emily Walker with the Virginia Society of CPAs. Can you hear me okay?
Yes, we can.
Okay, thank you. So as you know, the Virginia Society of CPAs has long supported tax conformity legislation being passed as emergency legislation to get the changes in effect as quickly as possible for the upcoming tax season. This year is no different. We continue to support that, and we encourage the body to work towards a resolution to this issue related to the PPP loans deductibility so that the bill can move forward with the necessary support to pass as an emergency bill. We do support some level of allowance of the deductibility, but we understand that there is a significant fiscal impact to doing so, and that you are going to have to negotiate what that may look like. And in the interest of full disclosure, several of our members are recipients of PPP loans themselves, as are many of their clients. Thank you.
All right, thank you. Is there anyone else?
Mr. Chairman, there are no more speakers in the waiting room.
All right. If there are no more speakers in the waiting room, Senator Newman, you wanted to weigh in on something here? So,
Mr. Chairman, I just have a number of questions, if you don't mind, sir.
Certainly.
And I guess is Secretary Lane still here or not here?
Yes, sir,
Yes,
Senator, I'm here.
He's here.
Hi, Secretary Lane. Secretary Lane, a couple of things. One, thank you for the information you've given. It's been helpful. First, am I correct that basically almost the automatic forgiveness is going to be at $150,000? Is that what the federal government is still kind of pegging that at?
Senator Newman, Senator Barker, right now, everybody at the federal level is eligible to deduct whatever their expenses are. I am not sure exact what level that would be at the federal level.
Okay.
I have not done research at the federal level. At the state level, we obviously know the average loan is about 107,000.
Yes, thank you. Maybe staff can help, Charles. Maybe we can look into it. I thought the federal government had set the kind of automatic forgiveness level at about $150,000. Is that what you understand, sir?
Mr. Chairman, Senator Newman, I don't have that in front of me, but I will research that and get back to you.
Good. Mr. Chairman.
And Senator Newman, just quickly on that, I think there are some data that are available fairly readily on the internet classifying the loans by different sizes. One, I think, is 0 to 150, and then 150 to 350, that type of thing. So,
Mr. Chairman, I think you're right. I think that's kind of one. And I guess the question, to Secretary Lane is, have you run just the numbers that you have before us, which have been very helpful and kind, but have you run the numbers before us, or have you run numbers at other levels? For instance, if we were to ever consider a threshold of 150,000, but you put a upper limit of 3 million on that. In other words, have you run some of those if-then items, or have you mostly just run the ones on page 9 and 10?
Kristen Collins is on the line here. She's been doing most of the running of the analysis, but I have only requested what you see here, Senator Newman, based on our discussions with various CPA groups and internal as to people looking at this for alternatives. But Kristen, have you run any additional revenue numbers?
Hi, good afternoon, Mr. Chairman, Senator Newman. We have not specifically run any other thresholds other than the ones that you see here. The data that the SBA provides is fairly detailed, and we were able to match some of it within our system and then, make some different assumptions to apply it at the various levels. So if you would like us to run, any other levels, we're happy to do so, but we have not done so yet.
Mr. Chairman, just
yes,
briefly.
Certainly.
So maybe that's the right person I can talk to. Could we figure out, let's say that, for instance, we went with that federal designation, and we may not, of 150,000, and then you looked at it and you drew a line at $3 million, and that's a number, and you did not allow any deduction at all for a company that received over $3 million, the 3 million to 10 million. Is that number knowable, or is that number not knowable?
Senator Newman, Mr. Chairman, that number is estimatable, so we can certainly estimate it for you. It won't be 100% certain, but we can estimate it based on the data.
But Senator, I would suggest you would be greater than the number you see on here for 100,000.
Right. Mr. Chairman, the reason I ask is those individuals, I think, have been somewhat deemed to be automatically forgivable for good reason. Number two, and I know there are some people out there that receive between $3 and $10 million that very much would like to have it, but it is at that point a drop in their bucket, right? It's really just not a big portion, and they're not going to make it or not make it based on the 6% of that number, right? Which would get you, if at 3 million, it would be $180,000. Just so I guess my thought is I'd love to see what those numbers are. I don't know where the subcommittee is going, but it seems to me that maybe having an additional ceiling of loan amount might allow you to serve better some that are below that, and it may even allow you to take the cap or threshold from 100,000 to another number. That's kind of my thoughts. Yeah.
All right. Any other comments or questions?
Mr. Chairman, Tommy.
Yes, Senator Norman.
Thank you very much. It's nice to see you remotely, sir.
Yes.
First of all, I have a question for Secretary Lane. Where you use the term, talking about qualifying taxpayers, and where you use the term individual, I know what that means, but you also use the term corporate entities. And what I would like to know, when you use the term corporate entities, is that picking up Subchapter C corporations? Is it picking up LLCs?
Yeah, no, sir. Those would be taxed as individuals.
They
It's the
would be
strictly
taxed.
corporate C corporations for the most part, and Kristen's on here, correct me, but we're really talking about the corporate clients. So LLC, subchapter S, those would be in the individual column.
Okay, thank you, Mr. Secretary.
Yes, sir.
All right, thank you.
Mr. Chairman, an
Certainly.
editorial comment, if I may, please.
Certainly, certainly.
Thank you, sir. Different parts of the Commonwealth of Virginia have felt the impact of this pandemic greater than others. The area of Virginia that I represent has absolutely been devastated. The tourism industry, whether it is hotels, whether it is restaurants, whether it's ancillary services, has been just devastated. And I'm a little concerned about trying to treat everyone on an equal basis. And Senator Newman's talking about, the amount that is received, but there are many, many smaller businesses in my area that have closed up. They are getting, hotel properties are getting foreclosed on, even though maybe they got access to a PPP loan. They've burned up their home equity, well, they're not their home equity, but their equity lines of credit. And I think that we have to be sensitive to it. And as I see where the administration is spending hundreds of millions of dollars on 300 and plus new full-time employees, that they are being sensitive as they should to some lower income people, but which is putting additional pressures on businesses, where I see the millions of dollars that is being directed towards social injustice, equity. Those are all laudable, but I think government outside of those needs to suck it up and find a way to cut back so that we can help these businesses that are really, really struggling. If these businesses continue to close in some parts of Virginia, the cost to the Commonwealth of Virginia on a long-term basis is going to be extraordinary. Thank you, Mr. Chairman. I appreciate your courtesy.
Thank you, Senator Norman. Any other comments?
Mr. Chairman,
Yes, Senator Howell. Oh.
we look like twins.
I didn't know you were here at all. I heard a female voice.
I have a question.
Certainly.
Ms. Riley mentioned that deductibility should be included in the tax conformity bill. Is that the Peterson legislation?
Mr. Chairman,
Yes.
Senator Locke, that is a provision in Senator Peterson's bill. So the answer is yes, but it could theoretically be included in Senator Howell's conformity bill as well.
Do we know what the impact would be for doing that?
Mr. Chairman, Senator Locke, taxes on the line, and could correct me, but from memory, I believe the estimate was in the range of $150 to $190 million in the first year, right, and about $190 to $300 million in the second year.
200 to 300 million, basically the second year. So
that is correct, Charles. That's correct.
Yeah. So it is a significant impact there to incorporate all of the deductibility. So.
Okay, and I had a question for Secretary Lane, just something that just want to make sure that I heard.
All right. Senator Locke.
Secretary Lane, you said something about not conforming to something, and I missed the something.
Yes, ma'am. What I was talking about, Senator Locke, is we would recommend not conforming to allowing these deductions because of there's 250,000 people in the Commonwealth that were eligible for these PPP loans. Only 113,000 got them. And others, many small businesses, did not. In fact, I think, and Senator Norman hit on something here too. I think the best way we have done to help those has been the Rebuild Virginia and targeted specifically to areas. And we have another provision in the budget to do that. So, Senator Locke, to your direct question is we would not recommend conforming to these deductions since they have been paid for by the federal government. We would more readily say we should make more grants available to those impacted areas.
Thank you. And finally, Mr. Chairman, my editorial comment would be that social justice is beyond being laudable. It's necessary after centuries of injustice.
Any other comments or questions? Senator Howell.
Thank you, Mr. Chairman. I think it's obvious to all of us we are going to need to amend the governor's proposal, even though some of us wish we didn't have to. And there are several proposals in front of us, several options that we have been given. And I think it would be I think we need to sort of get in our minds how much tax benefit we're going to give overall on this, because it does impact what we're able to do in other areas. Right. Now, trying to help small business, I think, is the primary goal of everybody in the Senate, really. I can't imagine anybody not supporting that, but I think we're going to have to make some hard recommendations. And I think we should at least start with what the Secretary has proposed as options.
All right. Well, I will provide my personal view of sort of how I think we need to approach this and the things we need to take into consideration. I mean, obviously, we've been dealing with a very significant issue over the last almost 12 months now, 11 to 12 months since this began to be played out. And it has had some impact on our overall economy, but it's particularly had disparate impacts upon the business sector there. And I think we need to understand that and to sort of look at sort of how that has played out. There clearly are a lot of businesses that have been very severely impacted by but what has the effect of the pandemic situation, and in some cases the effect of actual limitations in terms of business activity that have been imposed by state and local entities across the Commonwealth on things. There are businesses that have been severely impacted and have been able to survive thus far. Some of those that I've heard from have been ones that got the PPP loan, and because they were trying to look to the long-term situation and try to be helpful to their employees, they did spend all of their money on just maintaining their employment, the employees there, even though the employees did not necessarily have jobs to be able to do during most of that time period. That needs to be taken into consideration there, because I think many of our businesses have clearly acted in ways that we would want them to, and not necessarily what was in their own financial interest, and particularly in their own financial interest in the short term. So I think that's significant there. There are clearly also some businesses that have closed, and certainly Senator Norman and others that are in places where there's been a bigger impact across rather than other parts of the Commonwealth. Clearly has seen a lot of those closures of business. So there have been a number of businesses that have been impacted very negatively in that respect. On the other hand, I mean, our corporate tax revenues are up. So there are a lot of businesses that have done actually well during this time period there. So it's not been a universal situation where all businesses have lost income, have lost profitability during this pandemic period. And I think we need to try to make sure that we're doing the things that can help as many of those businesses as possible be able to get to the end of the pandemic period when we hopefully by sometime this summer or maybe stretching into the part of the fall, we're in a situation where the state of emergency is lifted and activity, business activity and basically human activity in the Commonwealth are getting back to a normal situation there. And so I think it's important that we make the types of decisions to help move us in that direction. I think that what we clearly have available to us right now, I've not heard anyone really clamor for the types of things that were in the CARES Act, particularly some of the retroactive things No one seems to be clamoring for those. No one seems to think that those are the things that will help drive the economy forward, particularly with that perspective that's mostly a retroactive type of thing rather than a prospective position there. There clearly are individuals, there are some individuals that are not in favor of any deductibility because they see it as a double benefit to the people there, which obviously if someone went out and got a loan on their own, they would not have had that type of situation, or even with the Rebuild Virginia would not have that situation. On the other hand, there clearly have been a lot of people who have gotten those types of loans who have done things to sort of keep their business alive, to be able to help their employees and do all those types of things. So I think it is certainly a legitimate type of consideration for us to look at least allowing a certain level of deductibility and looking at it, trying to sort of shape it towards helping mostly those smaller businesses who are the ones who have been more impacted by it than the larger businesses in the Commonwealth. And then simultaneously, I think it would be worth our consideration to looking forward to the extent that there is deductibility for the PPP loans, apply that same deductibility to the Rebuild Virginia loans and the grants and the grant activity there, and also look at if there is need for additional money to be in the Rebuild Virginia pot that could help more businesses make it through till the end of the pandemic situation, that we do that in the budget outside of the tax conformity in this situation here. So I think those are the types of things that we should be considering, and I think those are things that are affordable and will still allow us to do a lot of other things that are good for the Commonwealth and help move us towards addressing some of our issues long-term we need in terms of training people to fill a lot of the jobs that have been out there pretty much throughout the pandemic period but not been able to be filled because we didn't have enough people to be qualified to do some of those positions there. So I think that's sort of how we should approach it. I like the idea of looking at what's on page 10 of Secretary Lane's presentation, where he talked about the 10,000, the 25,000, the 50,000, the 100,000 categories there. I think it is worth looking at combining both corporate and individual. I'm not sure we should differentiate between what type of structure you set up for your business. You're going to be pretty much equally affected regardless of which it is there. I think it's worthwhile also getting some information so that we could address the issues that Senator Newman raised about sort of potentially going a little beyond some limits there and seeing what we could afford to be able to handle in that situation. And then looking at incorporating similar tax benefits for the people who've received the Rebuild Virginia loans, which by and large have largely been small businesses in Virginia and have not necessarily gotten the same benefits that the people who got the federal PPP loans have gotten. And then finally to look at sort of addressing things in terms of the capacity of the Rebuild Virginia program there. So if that's sort of a reasonable structure, I think that we could sort of build on that and make decisions in 3 or 4 different categories there to help us get to where I think we can provide them a significant positive benefit to the economic structure and the business capacity within the Commonwealth, and make sure that we're getting loans they're getting benefits not just to the companies that got significant benefits because they had the relationships with banks and other types of things to be able to get those PPP loans when they were readily available, but that we're helping a lot of the smaller businesses, and particularly some of the businesses in areas like like the Hampton Roads area that have had some have had maybe greater impact negatively than some of the other regions in the Commonwealth. Does that sort of sound like a reasonable sort of framework for looking at things? Yes, Senator Newman.
Yeah, I mean, I think you outlined kind of the universe pretty well. I would struggle quite a bit if we ever went down a regional approach,
right,
or a business type code.
Right, I agree.
Because if you lost your business or lost your money because you're in the restaurant business or versus manufacturing is really, really tough.
Yeah.
Maybe just building on that, I just have a question. Maybe you know the answer, Mr. Chairman, and maybe Aubrey does, but I know simplicity is nice.
Yes.
But simplicity also doesn't always get to the best answer, right?
Right,
and
yeah.
so I guess the question to staff or to Aubrey or to you is, if you have a worksheet, right, that you come up with and you answer certain questions and then you move forward, is that problematic in any great way? And I'm not going to go through what I'm thinking necessarily, but just, is that problematic, right? Could you have a worksheet that says that one thought is that if minus PPP, if you made more money in 2020 than you did in 2019, that's not the people who are trying to help, right?
Yeah, right.
And there are some, right? There are some people that got PPP money that made more money without PPP than they did the year before, right? But that gets you, just that one, gets you into a worksheet, right? And is that problematic or not problematic? And I don't know if the chair knows or Aubrey knows, but is a worksheet problematic or not, I guess?
So, Senator Newman, Senator Barker,
Yes.
Conformity is going to be interesting this year anyway, because there's going to be a lot of things that have to be analyzed. The tax department would work through a worksheet in saying, obviously, how this would be implemented. However, if you get into adjusted gross income, that becomes very problematic because there are lots of things that impact that besides sales and profits. In other words, you've got carry forwards or you've got these other type of issues. So in terms of your point, Senator Newman, about simplicity, the more clear we can make it, sort of like a specific cutoff, and you have you were given the met the federal recommendation, federal requirements, and you have these amount of expenses, that's something pretty easy to be accommodated. We get away from that, then it's going to take a lot more interpretation. And so Kristen may want to weigh in, but we will give specific guidance based on what the parameters are from the legislature. But generally, the more simple, the better approach.
All right. Are there any other comments or questions at this time? All right. Senator Howe, do you want to discuss just briefly the conformity bill that you're patroning for?
That conformity bill is dead, so I don't see much point in discussing it. What we're trying to do is come up with a substitute for it.
Okay. Are there?
And I think we're getting close.
Yeah, I think we're getting close, at least understanding how to do it. We may not have all the details worked out yet, but I think we are sort of heading in the right direction. Well, would it be your desire then sort of to leave things as they are right now, to work on whatever substitute that you can come up with to address the issues that we've raised today, to get any additional information we need from staff on things and from the secretary, and then to be able to present that to the full finance committee as we're developing, working out the budget pieces.
Well, I'd like to ask staff, have you got enough of a vision of what we're talking about here to be able to write the substitute, or do you have further concerns?
Mr. Chairman, Senator Howell, yes, I think I understand the major tenets of what's been discussed and can get with council to draft the substitute.
Terrific. Also, when you draft the substitute, I would appreciate taking off the emergency clause.
Thank you, Senator Howell, will do.
Yeah. All right. Are there any other things that anybody wants to say, sort of help guide staff in terms of working through sort of what would draft? Yes.
I do have one.
Okay, Senator Howell and then Senator
I know
Newman.
this is a bill that needs to be dealt with quickly.
Right.
But I think tomorrow is too quick.
That's what I was going to say.
Yes.
Oh, is that what you're going to say? Okay.
I agree.
Now, we may be having a meeting on Thursday. We probably will be, right? We don't know.
We will be meeting Tuesday, Wednesday, and whenever after that.
Thursday afternoon.
What it takes to get us through the rest of everything. So. All right. Right.
Okay. But
Okay.
just so that the people in the public who are interested in this know, we will not be discussing it tomorrow.
Okay.
Are both the Howell and the Peterson bills moving forward as substitutes?
Well, I think Senator Howell will work with staff to address that. We can talk with Senator Peterson, fill him in on what we've talked about today, and let him make a
Is
decision on
close
how
to
he
what
wants
he
to proceed
wanted.
on that. So. All right. Is there anything else anybody has for us to consider here? So. All right. If not, then we will adjourn and work with staff to get something moving forward here. So thank you all. Certainly.